Hey everyone, welcome back to Payroll UK, Payroll Made Simple. Today we're diving into salary sacrifice, what it means, how it works, and why you might see it mentioned on your payslip. Ever had your HR say, you can join a salary sacrifice scheme, and thought, hang on, why would I sacrifice my salary? Well, here's the twist. You're not really losing money. In fact, it's one of the smartest legal ways to pay less tax and boost your pension at the same time. So let's break it down in simple. What is salary sacrifice? In simple terms, salary sacrifice is when you give up a small part of your gross pay, that's your pay before tax and national insurance, in exchange for a non-cash benefit. It could be pension scheme, a cycle to work scheme, childcare vouchers, or even an electric car lease. Some employers provide mobile phones and technology and public transport passes. So, what are the benefits? When you join a salary sacrifice scheme, your gross pay, that's your pay before tax and national insurance, becomes slightly lower because of that. You actually pay less tax and less NI, which means your take-home pay can be higher overall. It's not just good for you. Your employer also saves on national insurance, so it's really a win for both sides. Some employers even add their NI savings straight into your pension pot if you're in a salary sacrifice pension scheme, basically free money towards your retirement. Let's check the terms. Employers set up salary sacrifice by changing your employment contract, but don't worry, they can only do it with your agreement. It's a formal written agreement between you and your employer, and you can usually opt in or opt out if something big happens in your life, like getting married, divorced, your partner made redundant, or expecting a baby. Each time there's a change, your employer needs to update your contract. Now, here's something important. If employees are allowed to switch between cash pay and benefits whenever they like, the tax and NI advantage won't apply. There are a few exceptions though, so I've dropped the official HMRC link in the description if you want to read more. Alright, before you sign up for any salary sacrifice scheme, here are a few things you should always check. Check your take-home pay. Make sure you're happy with how much you'll actually receive after the sacrifice. Stay above the national minimum wage. Your salary after the sacrifice mustn't drop below NMW. Understand the benefit. Is it worth it for you? A pension boost, a bike, or an EV lease might be great, but always do the maths. Know the impact on statutory payments. Things like maternity pay, sick pay, or redundancy could be based on your reduced salary. Mortgage and loan applications. Some lenders look at your gross salary, so your borrowing power might look slightly lower. Pension advantage. With pensions, this is usually a win. You save tax and NI, and sometimes your employer adds extra. Easy to opt in or opt out. Make sure you know how often you can change your choice and what notice you need to give. Future changes and documentation. Keep everything in writing and review it if tax or NI thresholds change each new tax year. So there you go, salary sacrifice in simple terms. It's one of the easiest ways to save tax, save NI, and grow your pension. But make sure you understand the details before you join. If this video helped you, give it a quick like, share it with your colleagues, and don't forget to subscribe to Payroll UK, Payroll Made Simple. Remember, this video is for educational purposes only and does not provide financial, tax, or legal advice. Salary sacrifice arrangements can affect your pay, benefits, and tax differently depending on your personal situation. Always check your payslip and speak to your HR or a qualified financial advisor before joining any scheme. Thank you and see you in the next video.